Hello, and welcome back to your next lesson of the Accelerated Investor Program with me, Warren Jeffrey. So far, we've taken a look at how you can grow your 100,000 Rand to 1 million by getting 20% a year return from your investment in explosive growth shares, 14.78% a year from blue chip shares, and 25.6% per annum from your property fund investments. We've allocated and invested 40,000 Rand of your 100,000 Rand, and the next investment we'll look at today will take you past the halfway point of investing your 100,000 Rand to grow it to more than 1 million. Today, we'll be focusing on how to open up a world of investment opportunities by taking your investments offshore. Now, before we get into it, there are two great advantages to investing offshore. Firstly, investing offshore means you can literally profit from the growth anywhere in the world. And second, you can get protection from any weakness in the Rand and any downturns or instability in our markets here in South Africa. And this is exactly why we'll allocate 20% or 20,000 Rand of your 100,000 Rand portfolio to offshore investments. So, how do you find a good offshore investment? To answer this, I've asked Gary Barfoot to join us today. Before joining the FSP Invest team, Gary worked as an investment manager at some of the country's top investment firms, including Momentum, Standard Bank, and Warwick Private Wealth. With almost a decade's experience as an investor in his own right, Gary has an intimate knowledge of what makes global markets tick and how to identify a solid investment opportunity. He leads the opinion on international investments with his insights into where the new emerging markets will rise, places like Africa, Eastern Europe, and Latin America. Thanks for joining us today, Gary. Can you explain to us exactly how you go about investing offshore?
Thank you, Warren. When it comes to investing offshore, there are three different methods you can use as an investor. 1. You can buy actual offshore shares listed on foreign exchanges. 2. You can invest in local companies with offshore exposure. 3. You can invest in an ETF that will replicate the performance of a specific region. Each of these methods has different benefits, which I'll talk you through. Let's start with buying actual offshore shares listed on a foreign stock exchange. To do this, the first thing you need to be aware of is that you will need an international brokerage account to be able to invest in shares listed offshore. This account will allow you to invest in shares from all around the world. To find out how to set up your offshore account, simply click on the link at the end of this lesson or visit the resource section of this site. Now the real question is, how do you know which offshore shares to invest in? The approach I like to use is known as a top-down approach. This simply means that when I look for an offshore investment, I start by looking at the big picture in a region or country and drill down deeper and deeper to find the best investment. My top-down strategy has 3 steps to it. The first step is to look at the big picture. By this, I mean that I look at the world as a whole and consider what the big trends are at the moment. Knowing this will allow you to isolate the regions in the world or countries that are most likely to have great growth potential. So for example, a big theme right now revolves around the fact that the developed nations like the US and Japan are stimulating their economies by weakening their currencies. By looking at which countries stand to benefit the most from the trends you've identified, you can isolate the regions that you should look to invest in. So, in the case of currency weakening, you might say Japan, with its heavily export-driven market, would stand to benefit the most from economic stimulus and currency weakening. Once you've considered the big picture and have an idea of which region you should look at, it's time to take the next step in the top-down strategy. Determine which sectors in the market are the most likely to reward your investment. For this step, you want to look at all the different sectors in a market and determine which will be the most profitable, given the big picture theme you've identified. Again, let's look at our earlier example. If Japan is stimulating its markets and devaluating its currency, then the sector most likely to benefit would be one of the major export sectors, like the auto manufacturing industry. This industry produces cars to sell to the world, and the weaker the Japanese currency gets, the cheaper Japanese exports are for foreign customers and countries, and the bigger companies' profits in this sector will be. And that makes this sector the place to look for investment opportunities. The third and final step in the top-down investment strategy is to look in detail where you should be putting your money. After having found the region or country that presents the big picture investment opportunity, and identifying the sector that stands to benefit the most from this big theme, you now need to find the investment opportunity within that sector. To do this, I like to look at the company fundamentals to confirm the company has the stability and financial backing to support future growth. One of the things you can look at is companies' earnings. You want to invest in companies with rising earnings, as this shows its ability to generate more and more money and profits. Again, using our currency example, having identified Japan as a good investment region because of stimulus and a weakening currency, and having seen the auto manufacturing sector as a good place to look for a sound investment, you can expect to be more competitively priced and profit as it exports its goods. Now, you look at company fundamentals like earnings. In this case, Toyota could be a great investment. The company is growing earnings thanks to more competitive pricing on the back of a weaker yen. And, being one of the world's largest car manufacturers, you'll be raking in the gains as Toyota exports its cars all around the world. So now you know how to find an offshore share investment. But let's have a look at other methods for you to invest offshore. The second method I mentioned is for you to invest in local companies with offshore exposure. Now this is actually a lot easier than you might think. You see, all you have to do is look at the different companies listed here on the JSE and look for the ones that earn their money from outside South African borders. And the great thing for you is, on the JSE we have some of the world's best international companies for you to invest in. For example, just take a look at SAB Miller. SAB has operations in over 75 countries around the world, and that means when you invest in SAB, you're effectively getting investment exposure to all of those 75 countries. Investing in local countries is a great way to get offshore exposure without needing an international brokerage account. But it's not my favorite. You see, there's another way to invest offshore that's even easier. And that brings me to the third method to invest offshore, and what is in my opinion one of the easiest and most cost-effective and profitable ways to invest offshore. I'm talking about investing into an ETF that replicates the performance of different regions around the world. These ETFs are funds that hold a variety of the top shares from around the world and are literally the easiest way for you to invest offshore. In fact, I like these international ETFs so much, I'm recommending one particular ETF as the best way for you to get all the offshore exposure you'll need to grow your 100,000 Rand into R1 million. The ETF I'm recommending is the DBX Tracker World ETF. This ETF will give you exposure to more than 1,900 of the best shares from all around the world, including the US, Europe, Japan, and much, much more. And best of all, you can invest in this ETF with just one purchase, and you don't even need an offshore account. You can invest in the DBX Tracker World ETF by purchasing it through your local broker account. So there you have it, the 3 ways to invest offshore.
Thank you, Gary. It's always great to hear all the options there are when it comes to investing. Just to recap, to get offshore exposure, you can 1. Buy actual offshore shares listed on a foreign exchange. 2. Invest in local companies with offshore exposure. And 3. You can invest in an ETF that will replicate the performance of a specific region. For your Accelerated Investor Million Rand portfolio, you're going to have to allocate 20% or 20,000 Rand of your 100,000 Rand to the DBX Tracker World ETF. Offshore exposure, so you can protect your investments from the weak Rand and cash in on international growth to grow your portfolio to R1 million Rand. You can expect returns of around 15.54% per annum from your offshore investments. This will quickly grow your 20,000 Rand. And we're not done yet, so make sure you join me in the next lesson of the Accelerated Investor Program, where we'll be covering how you can buy into the oldest protective wealth in the world, precious metals. Until then, here's to staying ahead of the game.